Hey guys, what's up? I'm Erin and welcome back to the channel. No one will ever care about your money more than you. I am a huge proponent of everyone taking charge of their own financial lives, understanding the basics of finance, taking an active role or at the very least a leading role in preparing for your own financial future. But there comes a time when you may want to turn to a financial professional to help you navigate those financial waters. By and large, those who turn to the pros generally have a significant sum accumulated. After all, if you're just getting started out, there might not be much for a professional to do. In the beginning, you have to spend less than you earn, invest and save the difference, and watch your wealth grow. That's about it. And while I love people making their own decisions when it comes to money and finance, there comes a time when you can really benefit from the advice and the guidance of a pro. Here are some of the reasons people might turn to a financial professional. Perhaps you just received a significant windfall, or maybe you're farther along in your savings and investing journey, and at this point, making a mistake can be very costly. Professionals can help reduce your tax liability, saving you money, helping you hold on to your wealth. Maybe you just really highly value your time and you don't want to spend it fretting over financial decisions. Maybe you're too emotional when it comes to your money and you need someone to be that objective sounding board. Maybe you want this person to serve as a resource for your family in taking care of your estate after you're gone. Maybe money just stresses you out and having someone to turn to helps you sleep better at night. This is the pillow test. You may have a different reason for wanting to hire a pro. There are no wrong ones. A financial professional can be a great asset to your team, but your money is precious, so you don't want to hand it to just anyone. If you're gonna hire someone to help you manage your money, you want to make sure they meet some pretty strict criteria. After all, if you hire the wrong financial professional, they could do more harm than good. There are 3 core areas you have to address before entrusting any financial professional with your hard-earned money. Those being custody, conflict, and competence. Get these areas right and you will likely have found yourself a great advisor. Number 1, custody. Back in 2008, Bernie Madoff was splashed across headlines for his now infamous Ponzi scheme. In a nutshell, before unraveling, Madoff was considered to be one of the nation's top money managers. Behind the scenes, the picture wasn't pretty. When clients would give Madoff their money, he would put it into his own accounts. He would send them statements reflecting stellar growth. If they requested a withdrawal, no problem. He fulfilled that request. But here's the thing. The money they were sent wasn't actually their money. It was money from new clients making new contributions to the funds. Now, why is that? Madoff had already spent their money because he had custody of their accounts. The statements they were sent were worth less than the paper they were printed on. Madoff figured that as long as there was a continual stream of new investments coming into the firm, he would be able to fulfill any withdrawal request. Well, 2008 hit and the markets took a nosedive. Investors stopped adding to their investment accounts and investors got scared and many started to request withdrawals. So many withdrawals were requested that Madoff couldn't fulfill them. And eventually, he confessed. So what does that mean for you? Well, it means you want to work with an advisor who has a separation of assets. Stated plainly, you want to make sure that your money is held at a national and reputable brokerage house. Madoff's clients' money was held at Madoff Investments. The statements they were sent came from Madoff Investments. There was no checks and balances in this scenario. You want to ensure that you are getting a statement directly from the brokerage house, like Vanguard or Fidelity or Charles Schwab, as well as directly from your advisor. You can sign a limited power of attorney, giving your advisor the ability to make trades within your account or bill their fee, but your advisor should never have the ability to make a withdrawal from your account. The key questions to ask here would be, who will take custody of my money? If the answer is the advisor, it's a no-go. One of my favorite quotes in regards to this is, if you don't want someone to be able to steal your money easily, don't give it to them. It's that simple. Bernie Madoff even said, brokerages and advisors should have independent custodians, and the government should have forced me to have independent custodians. Client funds should be held by independent custodians. If they had, I would have been caught long ago. Number 2, conflict. Despite what many consumers have been led to believe, not all financial advisors have their best interests in mind when suggesting investment vehicles. They do not practice under the fiduciary standard. The Investment Advisors Act of 1940 defines a registered investment advisor and establishes the fiduciary standard. What is the fiduciary standard? Well, an advisor held to this standard must act in the client's best interest. They have to disclose any conflicts of interest. They are prohibited from making trades simply for creating more revenue for themselves or the firm they work for, and they are governed by the SEC or state level equivalent. An investment broker, on the other hand, is held to the suitability standard. The suitability standard simply means that they have to make recommendations that are suitable for their clients. In no way are they obligated to act in their client's best interest, which means that they may make recommendations based on something that earns them a higher profit margin. There very well could be other funds with lower fees, better growth potential that may fit you better, but they don't have to recommend those ones to you. The bottom line, a registered investment advisor serves as a fiduciary and is held to the highest standard of care. A broker is not. And why would you pay someone who doesn't have to have your best interests at heart? Keep in mind that there are a whole host of terms like financial advisor, financial planner, wealth advisor, or wealth manager that are not regulated and can be used by absolutely anyone. Key questions to ask. Are you a broker or an investment advisor? Answer, advisor only. Are you registered with the SEC or FINRA? SEC, not both and not just FINRA. Do you have the Series 6, 7, or 65 license? The 65, not all and not just the 6 or 7. The other problem, duly registered advisors. What's that? That is an independent investment advisor and a broker, all in one person. Wait, that's possible? Yes, it is. And it means that they change hats. If they put on their investment advisor hat, they are obligated to act in your best interest. If they put on their broker hat, they are not held to any such obligation. This is really annoying. So how to find out if this person is duly registered? Well, one, I would simply ask. If they're not forthcoming with the information, I don't know if it's somebody you really want to work with, because you want to work with somebody who's honest and transparent and reputable. Otherwise, you can do some digging on the website. You're going to look for the company name and then broker dealer. If you see that, it likely means that they are duly registered. And if that is the case, you're likely going to notice a lot of the company's funds, which earn them a higher commission, are going to end up in your portfolio. If you work with an advisor who works for a company that owns its own funds or is somehow associated with a company that owns its own funds, you can't be surprised if that advisor turns around and tries to sell you those company's funds. You have to ask yourself, what are the odds that this company has the best funds for me? If you walk into a Toyota dealership, you're not surprised when they try to sell you a Toyota. You want a person who will always act with your best interest in mind, no matter what the circumstances, no matter if you are present or not, because there may come a day when you aren't. If you pass away, you want this person to continue to act in your best interest or your family's best interest as they walk your family through your finances. And number 3, competence. First, you want to look at your advisor's credentials. The one that I like best is the CFP, the Certified Financial Planner. Not just a financial planner, the Certified Financial Planner. This one is the gold standard. There are literally hundreds and hundreds of different recognized designations, and a lot of them really aren't all that impressive. My other favorite is the Certified Public Accountant, and this person is your asset for tax planning. Both of these designations require a college degree, advanced studies, a formal exam, and continuing education. Next, you want to check that this advisor is suitable for you personally. You want to make sure their other clients look like you. Are you a high net worth individual? You want to make sure that their other clients that they're working with are high net worth individuals. You don't want somebody to be figuring out their job on you. You wouldn't want to be your doctor's first patient. I remember when I was 17, I was diagnosed with a meningioma, which is a type of brain tumor. It was rather large, like the size of a grapefruit, kind of complicated. My mom turned to the doctor and she's like, "Are you capable of this?" And I will never forget what the doctor said. He said, "We'll give it a try." What? Obviously, we were out of there. That's ridiculous. You do not want to be someone's learning experience. Who says that? We'll give it a try. That's just ridiculous. And finally, you want to make sure you're working with an advisor who has a strategy that you agree with. Ask them to describe their strategy to you. Do they say there's a way you can participate with the upsides of the market and avoid all the downsides? That sounds like market timing, and we all know that's not possible. Use your gut, use common sense. You want to make sure you're working with an advisor who has principles and a solid approach. Finding a trustworthy and qualified financial advisor isn't as simple as choosing the first name you see. You want to make sure you properly vet this person and ensure that they are right for you. I'm going to leave you with this list of questions as compiled by an advising firm that I highly respect for you to use. Where will my money be held? Answer, somewhere else. Are you a broker? Answer, no. Are you a duly registered advisor? Answer, no. Do you or any affiliate sell proprietary investments of any kind? Answer, no. How are you compensated? Answer, disclosed in writing and never make a commission on the sale of any investment products. What are your credentials and the credentials of your team members? Well, the answer here really is going to depend on what you're looking for. If you're looking for tax advice, you want a CPA. If you're looking for financial planning advice, you want a CFP. What is your planning and investment management approach? Answer, there should be a core philosophy and it should be one that you agree with. What does your typical client look like? Answer, what they describe should sound a lot like you. Ultimately, if and when you decide to hire a financial professional, you still want to make sure you're actively involved in your finances. You want this financial advisor to be there to guide you, not to replace you. Because remember, at the end of the day, no one will ever care about your money more than you. Well, that's my criteria for looking for a financial advisor. What are some that you would add to the list? What are things that you look for? Let me know in the comments down below. But that's gonna do it for me today, guys. I post new videos every single week. If you got anything at all out of this one, please hit that like button. If you're new here, please consider subscribing or consider sharing, as it really does help the channel. I hope you guys have a great day and I'll see you soon. Bye.